Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 28th of June. All right, now let me unwind some of the things that have been happening in the market. Some of them don't make sense, some of them do, and we'll piece it together, then look at the key opportunities coming up in the next 24 hours. All right, now the dollar weaker after data burst, euro rises on ECB comments. Now, there is the ECB have got a discussion panel with a bunch of central bank governors talking, and Christine Lagarde came out and said basically the euro or the ECB is heading into a new phase, okay, of inflation. Like this is so out of all the central bankers, Christine Lagarde is one that doesn't come from a history of central banking. And I tell you what, the job she's done is quite amazing, and it's actually real because it's exactly what they should be saying. It is unlikely that in the near future, the central bank will be able to state with full confidence that the peak rates have been reached. Now, this is something the central banks always try and get to as quick as they can. They say we've hit peak rates and that the markets retract. But, you know, we've got dynamic markets. There's so much QE in the markets these days. It's almost refreshing the sort of honesty that Christine Lagarde comes out with. Now, that sort of basically tells us that, you know, we could potentially expect higher rates in the ECB. But what it does is it knocks out a lot of the stronger second, third tier US numbers that came out, right? And let me just give you a look at the data because like the key release by absolutely was the Canadian CPI numbers. Now, everyone was sort of really geared up for this, me included. The month-on-month numbers slightly off the mark. Okay, 0.5 expected, 0.4. The core number just off the mark there as well by 0.2%. The rest of the numbers pretty much in line, right? So the impact of the Canadian inflation numbers was really diffused by this outcome and takes the pressure off the Bank of Canada, right? So nothing to see there. US durable goods, massively much stronger than expected, right? They were expecting minus 1%, up 1.7%. Even ex-transport up 0.6. This is a really strong number, not just on the sheet here, but it shows that the US economy is very resilient and they are still in like massive, well, not growth, but they've still got a lot going on, right? And that's sort of going to be key to this. The S&P Case-Shiller home price numbers, right? These are a highly respected number, and they came out before the US consumer confidence numbers, but these and the new home sales, all strong numbers, okay? Stronger than forecast. I shouldn't say strong numbers. I mean, like the Case-Shiller was minus 1.7, but much better than the market was expecting. So with these numbers, the durable goods, the S&P Case-Shiller numbers, consumer confidence, the new home sales, you'd think the dollar would rally, but it didn't, right? And they're sort of talking about, well, it takes off the pressure off the dollar, right? This is the whole sort of state of it. So looking at the charts, the dollar index has drifted lower, euro bounced. Now, this makes sense, right? You've got to focus on the things that do make sense to you. Now, Christine Lagarde talking about we're going into a new phase of rates. We don't know, like inflation is going to be increasing. We don't know where it's going to stop, etc. That is a positive for euro, and we saw a move there. Now, all the US numbers, right, suggested that the US dollar should be higher, but it's not. Okay. And they're sort of saying, well, it takes off the chance for the US to go into recession. And this is a really good thing. Global growth's back in. So we're going to sell dollars. And you see the equity markets here rally aggressively, right? You think, well, strong numbers, right? It's going to keep putting pressure on the Fed to raise rates. So you wouldn't expect the equity markets to rally at that point. The gold is sort of still drifting lower. And we did have some oil numbers, which were slightly weaker as far as supply goes. You think that'll go up a bit. I mean, we saw a bit of a knee-jerk reaction, but it is still drifting lower there as well. The cryptos, I think there seems to be a bit of cash transferring into the cryptos. And if we have a look at the major currency pairs, this is sort of, once again, where you can see the impact of the lack of an impact of the dollar move, right? Dollar Swiss pretty much, I mean, it did see a little bit of a knee-jerk reaction there. Still, dollar Swiss not doing a lot, especially when euro's broken down and then come straight back up to where it was prior to the break. Sterling's just hugging that support trend line, waiting for the next leg of direction. The Aussie's under the pump. whereas the Kiwi is sitting pretty stagnant. Now, this is a bit of a warning sign, right? If you see these bottom four pairs in particular, excuse me, behaving differently, which is sort of what we are, then it's a bit of a warning sign that things are not right, right? So you just take that with a grain of salt, what's happening in the market, because the key things that are happening, right? Christine Lagarde's talking at the ECB panel on central banking, and there's more of this stuff today. I'll show you the calendar in a second. So that's going to be sort of come into play, but I think she said what she needed to. The dollar index is just drifting sideways. Dollar yen, right? The carry trade, whatever you want to call it this stage, is massively in play. I think the Japanese finance minister Suzuki was coming out saying, we will take action if the yen continues to depreciate. Now, the yen depreciating is great for exports, but may not be great for international cash, but that's a good thing. So he's the finance minister. He's not the BOJ, right? So don't get mixed up with who's doing the intervening here. But I tell you what, it is getting to levels where you've got to start paying attention, and we could look for some sort of level of intervention at some point, right? Dollar CAD moving to the top side. As I said, the pressure off the Bank of Canada, right, to raise rates. So, you know what? People who are long CAD, sell those, and you get that little dollar rise. If anything, dollar CAD was the one instrument that rallied with the dollar and the neutral inflation numbers out of Canada. All right, so there's some weird things going on, right? So you just, as I said, you need to focus on what makes sense. Okay, at this point, we are in the last week of the month. A lot of central bankers talking. So this is the stuff we're dealing with. Now, if I just bring up today's, the calendar again, let me just clear that page here. Now, coming down here, just having a look at what else is coming out. Now, we've got some, the Australian CPI inflation indicator, it's called these days. They're expecting a big reversal, right? The previous number, 6.8, back to 6.1. The range on News Squawk, take it with a grain of salt, 6.9 to 5.8, right? Massive range, but this is pretty important because 6.1. Now, the Aussie, right, has been getting hammered against a load of instruments. Okay, so let me just come over here and let's have a look at this, because just looking at the Aussie on the face value of it, okay, we all know it's just been going lower, right? But what are we doing long term? This is like, where the short term action is, and you would be drawing trend lines here. Okay, I'd be getting tuned up here to work out where exactly the closest trend line is. This is a good trend line here, so 67.07. But I need to sort of drill into the Aussie to find out what's going on. So on the overall overview, okay, short term, long term, okay, hourly, okay, it's drifting lower. Like this is where it started, just below 65, right? So, or 64.5 down there. It's just drifting back to where it was. Now we do have, if we get weak CPI numbers here, you've got to expect this to continue. Now, what's happening on the dailies? Well, it's just mid-range. It's got a lot of room to move down. Same with the weeklies and the monthlies for that matter. So there's a lot of room downside. We do have a clear target if the numbers came out exceptionally strong, which none of the data sort of really suggests it will be. We do have a level there at 67.07 to get into the market, but it doesn't look super cool. You come into the crosses, right? This is where you have a look. Like, as I said, it's been getting belted against everything. Aussie, Kiwi lower, Euro's up massively against the Aussie, Sterling's up massively against the Aussie. Against the CAD, it's getting belted, and even Aussie Swiss, right? Now, Aussie Swiss, even on an interest rate differential, there's a big difference between the Aussie and the Swiss. You wouldn't think it'd be getting hit that hard, but that's just the opposite to Euro Aussie. So, and Kiwi, I mean, Aussie yen, obviously moving topside aggressively, but the Aussie yen, as far as the yen crosses go, Aussie is probably the one instrument that is underperforming, probably more so than a lot of the other instruments. Okay, so if I just get the yen crosses up, it's cruising topside against most of these. Okay, Euro yen, Sterling yen, CAD yen, Kiwi yen, and then you've got this discombobulating Aussie, right? So you're thinking, well, what's going on here? The yen crosses are going up, right? As I said, the carry trade, I'll be sort of more attributing it to the carry trade, etc. The Aussie's not exactly doing much. Now, we get really strong numbers. Of course, it's going to put a boost on the Aussie yen. Weaker numbers, well, maybe it sort of just drifts lower, but we aren't going to see a change in rates today, right? So you just need to sort of pay attention to what's sort of going on. If I come back, where's my Aussie page here? Right. So coming back to the Aussie, I was just having a look across the board here at a few other factors as well. Which page we got here? Okay, so let's just have a look here, because when you analyze an instrument, right? So let me just come over here to we do have the numbers there coming out. You've got the relative strength on the hourlies, right? Now, if you look at the Aussie against most of these crosses, okay, it is getting belted pretty much almost equally across the board. And that's good to see, right? There's no sort of, favoritism there. It's just getting hammered across the board. But when you look at the on the daily perspective, okay, Aussie yen is up 7.81%. Okay, against sterling, it's down 6.89. Like the major crosses, there's a big, basically what I'm trying to describe here is there's a trading opportunity coming, right? Whether the other central banks start leaning towards a softer hiking phase or not, but the Aussie is getting hammered against the other crosses. It will come back into line at some point. It will be a CPI number that does it, or comments from the central bank. So, Aussie euro, Aussie sterling, the obviously Aussie yen's the odd one out, and Aussie CAD, Aussie Kiwi only down, up 1%. That's the, Aussie and Kiwi are so closely related that you would expect that. So just have a look at keep an eye on these crosses, because they are Aussie Swiss down 5%, the rest of them fall up to almost 7%. There can be some big adjustments on a CPI release. Okay, it's sort of like sitting there waiting for us to sort of tap it on the head. Now, just coming back to the crosses, I don't want to lose you here with too much detail, but the like Aussie Kiwi, the way the brokers present the pricing here on a lot of these crosses, there are good trading opportunities because the spreads naturally are much wider than what we actually get in the market. So, like, what's going to change the perspective here now on euro, Aussie, sterling, Aussie? Well, really weak numbers just goes with the trend, right? That's for sure. Really strong numbers, that's where you sort of weigh up the rest of the economic fundamentals that we've been getting. Well, we might see a correction, but it has to be a hell of a number. Okay, so to me, okay, yeah, sure, strong numbers. Aussie yen should just keep ticking away topside. The rest of them, it's going to be fighting, like a strong Aussie number is going to be fighting the current trends. Okay, so just be aware of that as we go through it. It needs to be significantly higher. A weaker number here is an easier trade and confirms that the RBA is on hold and they may have actually hit the top of their interest rate cycle. So just keep a very close eye on these inflation numbers because they will potentially have a major impact as we go through the Asian session. And you know what? That's pretty much all we can do at this point is if I just come back to the global markets page, just to get you sort of focused on where the action's at. As I said, this isn't like easy markets for professional traders because we are looking at situations where the economic numbers, okay, aren't necessarily matching up with some of the moves. Like this consumer confidence number out of the US yesterday was exceptionally strong, right? And we didn't see the match up with the move in the dollar, okay? Now, with regards the central bankers, they are at this ECB panel discussion, okay? It's all about central bank policy. So you've got, I think, Jerome Powell speaking today. Christine Lagarde will be back up there as well doing the wrap-up. So just keep an eye on this as you go through that sort of European session. It did create a few waves. Well, here's the closing remarks here from Christine Lagarde. So that's something to be aware of if you are holding euros or trading euro in particular. Now, just looking at the markets themselves, we did have a risk-on sort of situation as far as US equity futures go. And we saw the Asian equities and European equities go up. At the moment, on the reset, we are seeing a bit of a correction there, right? So a bit of a risk-off sentiment. Is that flowing through to the major currencies? Not at all. Okay, so the US equity futures down, the dollar down, other currencies up, right? So this is a bit of discombobulation once again. I'd be focusing on like things we know. Euro went up because the central bank governor, said, that was we're entering a new phase of inflation. So just be aware of that as you go forward. Let me just bring the calendar over. So looking at today's activity, it's a little bit sort of lost in here. You've got the monthly CPI indicator tucked away. Forecast is 6.1%, as I was saying. Then you've got a lot of peripheral numbers out of Europe, out of the US. We've got these central bankers speaking, which is not uncommon for the fourth week of the month, the last week. And then you come back down here, there's some more crude numbers. And then you've got Christine Lagarde sort of wrapping it up, the ECB panel discussion. And that's pretty much all she wrote for Wednesday. So to me, the major focus, will be the Aussie CPI numbers. And then obviously just keep an eye on this European ECB central bank policy announcement. So, and that's all we've got really at this stage, guys. It's a little bit of a funny one, looking at those numbers previously. So just keep an eye on the Aussie 6.1%. You're looking for some significant variance. This is our range of data, 5.8 to 6.9. Take it what you will. I'm looking for sort of weaker numbers. Actually, just on that too, I was just going to say, like, as far as all the crosses go, if this number did come out stronger with the recent Canadian inflation numbers, sort of not necessarily weak, but slightly weaker, some of these numbers than expected or as expected. A stronger number here would be Aussie CAD would be the go-to, because you've just got the fresh Canadian CPI numbers and the fresh Aussie CPI numbers. So perhaps Aussie CAD could be the pair to be trading there. All right. Now, the main thing is here, if you don't understand what's going on in the markets, and I can tell you what, a lot of the times it doesn't make sense to me. I'll tell you what I do. I stay out of the market. Now, as I was saying, the Bank of Japan should start to talk very shortly. This will be doing a lot of wonders for their exports, but the yen against all the other major currencies is getting belted, right? And this is the normal flow. Back in the 90s, this used to happen all the time, until it got to a point where the BOJ would lose their biscuits and they'd start to sort of go a bit mental, intervene. You'd see some major adjustments, and then it'd just come straight back. So just be aware, we will be focusing on the yen crosses very shortly, because you don't want to miss a chance for a major intervention where they do intervene and these things correct like 5, 6, 7% on one day, right? So that's where we are. This is the raw nerve in the market. It doesn't seem to be a problem just yet, but it is building a bit more anticipation around it. So the yen crosses have got to be on your radar every day. Just check out where they are, see what's going on. And if anything, start to prepare potential break trades to the downside, because if the Bank of Japan are going to intervene, it's usually in the Asian afternoon, right? When they're going to get bang for their buck. Early Europe, they sort of get everything rolling, but they've got to be careful, right? The Bank of Japan doesn't have a huge amount of cash. So if they are going to intervene, they need to do it at the right time, right? Usually it might coincide with major US dollar weakness. But don't forget, fundamentally, there's a good reason why this thing is so low. Rates in Japan are minus 0.1. Everywhere else, they're going through the roof in comparison. So if they intervene, you get a massive knee-jerk reaction, and then it should just come straight back. But anyway, that's where we are with that. All right, guys, I know there's a lot in that, but I just wanted to sort of explain, like, some of these moves haven't made sense. Some do. And let's just sort of keep our eye on the price here. This isn't the greatest week of the month to trade. There are still some good opportunities later this week. So just keep control of your capital management. This is all about managing your, excuse me, I just got a bit of a cold, managing your performance anxiety, right? So if you're not making money and you're getting frustrated, well, just relax, right? You don't want to lose money on crap situations. Okay, anyway, that's it from me, guys. Good luck. All the best. Cheerio.